Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do. And so we begin. As I said yesterday, not huge uh, market information coming out, but there was a lot of market information out. And the most notable pieces are the initial jobless claims, which this number here is the actual initial jobless claims number. It was expected that it was 220,000. The actual is 212,000. And last month's was 220,000. So less people are losing their jobs on that metric. The other most notable thing that came out today was U.S. retail sales. Last month it was up 0.4%. We were expecting negative 0.3%. We came in at negative 0.8%. I believe that the negative number that was expected has a little to do with seasonality. Correct me if I'm wrong in the comments. January, you're not expected to have as much sales as obviously the Christmas month, and I'm pretty sure that that's where that number comes from mainly. Tomorrow we have very important information coming out as for that will help us with inflation and help. It could really make markets go up or down. The producer price index numbers and the PPI, core PPI, and then year over year numbers. The reason this is so important because it gives a general sense to the market how much companies are paying for their stuff, and this is a hugely important number for inflation, which means it's hugely important to Fed funds futures and interest rates, which have a huge effect on the value of all securities. So, so it's a very important report coming out tomorrow on Friday. I found it was notable today that the S&P 500 closed at an all-time high. This is not something that we're seeing across major headlines on websites or that anyone's really talking about, but we are currently at an all-time high, and usually all-time highs are fairly bullish for the markets. So that's the first chart I wanted to look at. That PPI number is really gonna shake things up one way or another. Today, I interpreted today's candle on the VIX as another interesting thing going on. Another sort of inside day, opening and closing within this previous green candle. It's not as strong as an inside day the day after, but it's obvious that the market is really waiting for this PPI data, and nothing that came out today was all that consequential. Nothing else was very notable to me, but I wanted to finish this video just pointing out something that's been going on specifically with semiconductors and bubbles. Every day I use Yahoo Finance lists of trending tickers, most actively traded tickers, things that have gone up the most and down the most. I just give it a quick scan to see if anything was of note, and this is kind of what prompted me to want to discuss this a little bit. This super microcomputer, this thing is a manufacturer of semiconductors, and it went up 14% today. And if you were lucky enough to know this was coming a year ago, when it was in the $90 range, you would have multiplied your investment by 10. Wow, what a great experience that would have been. Too bad my crystal ball did not see that one coming. But, do I feel like I missed out? Am I having fear of missing out? Am I experiencing FOMO? No, because I'm not stupid and I'm not a gambler and I'm an investor. And, when companies are showing PE ratios of 80 and even Nvidia at 95, I say to myself, these companies haven't proven that they're able to make 4 times as much money as they can make today. And so people that are buying this up higher and higher are guessing and they're gambling, and it's not investing, it's speculating. um, I'm an investor. Mostly I'll speculate on things, but I'll speculate that industries that have been deemed as worth almost nothing are probably not worth nothing. I'd rather be in something like that than playing a game of musical chairs and, you know, going around and waiting until the music stops, and and I look behind me and everybody's sitting down except for me. And just to illustrate this very quickly, Gareth Soloway pointed this out very recently, and showing what can happen with people getting excited about new technology. This is a chart of Cisco Systems that was a big part of the internet bubble, and now, as you can see, from its beginning, a value of 10 cents. Wow, $7, just right there. That move made millionaires and billionaires. But then we continue higher and higher and higher and higher and higher and higher, and oh my goodness, it just keeps going up until we get to around $80 a share. What a crazy experience that would have been. But then, as Benjamin Graham says, whenever you have something that a certain thing that seems like it's worth an infinite amount of money, guess what? More companies come in, there's competition that comes in, and the ability to earn more money eventually stops. And so if we look past this chart, past 2000, when it was at $80 a share, we see this same company, Cisco, dropped promptly down to $12 a share, and has stayed in this range for how many? Oh, we're still not back up to that peak here. And so, if you can imagine this being NVIDIA and us being, who knows, here, are we at the peak? Where are we on this chart? We are somewhere on this chart here. And as you can see, 25 years later in Cisco, we still haven't seen that kind of valuation. And if you don't watch Gareth Soloway and you're more interested in this, please see his videos. He goes through a number of other charts showing bubbles that have popped. The biggest clue that you can look for is, if you're interested in an industry, look at the top companies, look at the money they're able to earn. Just look at the PE ratio. If the PE ratio is over 25, there is a lot of speculation in the price. If it's 10, if it's 7, there's actually a lot of speculation that the company is not going to be able to make very much money in the future, because that's an abnormally low price for the amount of money that the company is able to earn. I hope you enjoyed this video. Thank you for watching. Robschild.